This is exactly what governments all around the world want to do with cryptocurrency. Cryptocurrency is no longer just a speculative investment. It's now a vital part of the global financial landscape, prompting governments worldwide to redefine their regulations. Welcome to our comprehensive exploration of how different countries are navigating the complex world of cryptocurrency regulation.
Intelligence Studio. Do subscribe and like the video.
In this video, we'll break down the current state of cryptocurrency regulation across various countries, providing you with an in-depth understanding of how each nation is approaching this new asset class. As cryptocurrency gains prominence, countries have taken varied approaches to regulation. From the European Union's proactive measures to the ongoing legislative battles in the United States, the landscape is constantly evolving. Here are some key takeaways. The European Union is leading with regulations that require crypto service providers to combat illicit activities. The United States is gradually moving towards regulation, but faces significant legal challenges. Other nations have varying classifications and tax treatments for cryptocurrencies, reflecting their unique economic landscapes. Starting with the United States, a new regulatory framework was introduced in 2022, empowering existing market regulators like the Securities and Exchange Commission, or SEC, and the Commodity Futures Trading Commission, or CFTC, to oversee the crypto market. The SEC has been quite active in regulating the sector, with numerous lawsuits against major players like Ripple, Coinbase and Binance. In a pivotal 2023 ruling, a district court determined that Ripple's XRP sales were securities only when sold to institutions, not on exchanges. This marked a significant moment for the crypto industry. Following this, in November 2023, a court ordered the SEC to re-evaluate Grayscale's Bitcoin ETF application, leading to the approval of the first Bitcoin spot ETFs in January 2024 and Ethereum spot ETFs in July 2024. However, SEC Chair Gary Gensler cautioned that these approvals do not signify a change in the Commission's stance on other crypto assets, emphasizing that the majority of them are considered investment contracts under federal securities laws. Now, let's look at China. The People's Bank of China has taken a hardline approach, banning all crypto enterprises from operating within its borders, citing concerns over unapproved public financing. This strict regulation also led to a ban on Bitcoin mining in May 2021, forcing many miners to relocate. By September 2021, cryptocurrencies were banned outright in China, reflecting the government's commitment to controlling the financial environment. Moving on to Canada, cryptocurrencies are not classified as legal tender, but the country has taken significant steps towards regulation. Canada was the first nation to approve a Bitcoin exchange-traded fund, or ETF. The Canadian Securities Administrators, or CSA, and the Investment Industry Regulatory Organization of Canada, or IIROC, require crypto trading platforms to register with provincial regulators. All crypto investment firms are classified as money service businesses, or MSBs, and must comply with Financial Transactions and Reports Analysis Centre of Canada, or FINTRAC, regulations. Taxation in Canada treats cryptocurrencies similarly to commodities. In the United Kingdom, the lower house of Parliament recognised crypto assets as regulated financial instruments in October 2022. The Financial Services and Markets Act, which became law in June 2023, extends existing regulations to cover all crypto assets and services. Investors are still subject to capital gains tax on crypto profits, and the law mandates stringent reporting requirements, including Know Your Client standards and anti-money laundering regulations. Notably, crypto derivatives trading is banned in the UK. Japan has adopted a progressive stance on cryptocurrency regulations. Recognizing cryptocurrencies as legal property under the Payment Services Act, Japan requires exchanges to register with the Financial Services Agency and adhere to anti-money laundering and counter-terrorism financing obligations. Trading gains from cryptocurrencies are treated as miscellaneous income and taxed accordingly. In September 2022, the government announced new remittance rules to prevent money laundering via crypto exchanges, revising the Act on Prevention of Transfer of Criminal Proceeds. In Australia, cryptocurrencies are classified as legal property, subject to capital gains tax. Exchanges must register with the Australian Transaction Reports and Analysis Centre and comply with anti-money laundering and counter-terrorism financing regulations. Since 2019, the Australian Securities and Investments Commission has introduced regulatory requirements for initial coin offerings and banned privacy coins. In 2021, plans were announced for a licensing framework around cryptocurrency, with a draft regulatory framework expected in 2024. Singapore classifies cryptocurrency as property but not legal tender. The Monetary Authority of Singapore, or MAS, licenses exchanges under the Payment Services Act. In August 2023, MAS announced regulations for stablecoin issuers, requiring compliance with specific criteria. Capital gains are not taxed in Singapore, although companies engaging in frequent cryptocurrency transactions are taxed on their gains as income. In South Korea, cryptocurrency exchanges must register with the Korea Financial Intelligence Unit, or KFIU. The 2023 Act on the Protection of Virtual Asset Users outlines legal and illegal uses of virtual assets and ensures user protection through regulatory compliance. India remains in a state of indecision regarding crypto regulation, with a proposed bill that could ban private cryptocurrencies still awaiting a vote. Currently, a 30% tax is levied on crypto investments, along with a 1% tax deduction at source on trades. In Brazil, while Bitcoin is not legal tender, the country has legalized cryptocurrencies as payment methods. As of June 20, 2023, Law Number 14,478 established a regulatory framework for cryptocurrency, with the Brazilian Central Bank overseeing the operations of crypto exchanges. Finally, in the European Union, cryptocurrency is legal, but regulations vary by member state. The EU has implemented the 5th and 6th anti-money laundering directives to tighten KYC and CFT obligations. The landscape of cryptocurrency regulation is dynamic and multifaceted, with each country's approach influenced by its unique economic, political, and social contexts. As the world of crypto continues to evolve, so too will the regulations that govern it. If you found this video informative, please like, subscribe, and leave your thoughts in the comments below. How do you think cryptocurrency regulations will evolve in the future? Let us know. Thank you for watching. Stay tuned for more insights into the world of finance and cryptocurrency.